We'd like to welcome you here and wish you a good day. Those viewing the slide presentation, some of the things that due dates we expect captive managers to have their captives meet. I'm Steve Price, ACI and Financial Examiner with the Utah Insurance Department. This presentation should help to explain what the Utah Insurance Department requires of captive managers. It should correlate with the yearly reminders that we send out to all newly approved providers approved to work here in Utah. In general, we expect 3 due dates to be met, and in chronological order, they'd be the annual statement for fiscal years that are usually ending December 31st. The annual statements are due March 1st, and then the annual renewal fees would be due on June 1st, and the annual audits would be due June 30th. We can delve down a little further and take a look at each of these things. Slide 2. First, let's look at the annual statements that are now filed electronically with Utah Insurance Department. These are due generally on March 1st, unless you have a different fiscal year. If you have a different fiscal year, they're due on the first day of the third month following the fiscal year. In our example here on the slide, it's September 30th, it have a due date of December the 1st. The fiscal year exceptions are only for pure captives. If for some reason you find you can't have the annual statement to us completed by the due date, you can request an extension. You send that either to the analyst or to our captive email. We like it to be a written request. An email would suffice, and you could expect a stamped approval in a PDF form, probably of your email. Stamped approval saying, yes, we've approved your request for an extension. These extension requests are due prior to the end of the due date. In our example of March 1st, they'd have to be in by the end of the day of March 1st. You're welcome to plan ahead and have your extensions in earlier. Besides the extension, new captives can request a waiver of the Statement of Actuarial Opinion and annual audit. We don't automatically grant those. They have to be a written request and the same stamped approval to be waived. The Statement of Actuarial Opinion, we call the SAO, is due for both at the time the annual statement is due and the annual audit, and if we can add it to the SAO to the annual audit if you request it. Slide 3. What do we mean when we say the annual statement's due by the first day of the third month of the fiscal year? We mean that all the annual statement documentation is due. That includes not just electronically the filing of the annual statement, but the Statement of Economic Benefit, we call it the SEB. So both of those are submitted electronically to us, going to our website. And also another thing that you have to send in is the Statement of Actuarial Opinion, done by the actuary, and the JURAT page. These last 2 documents can be submitted securely using our file upload found online at captive.utah.gov. To use the file upload, you just go to captive.utah.gov. At the top of the page on the Licensing and Forms tab, click on that, and go to the bottom of the page where you'd find the file upload. It requires a Windows operating system and Windows more recent than Windows XP, and works best with the Chrome browser. You just click on the underlined file upload, and you'll need to have a user ID and password. Instructions are there for creating one if it's a first-time user. So the annual statement and SEB are there. Before the file upload, you'd see the annual statements. You'd fill those out electronically at our website. That's done, again, choosing the Licensing and Forms tab at the top. The Statement of Actuarial Opinion is to be prepared by an approved actuary. You can see the requirements in R590-238-4 for the annual statement or annual reporting requirements. The SAO should set forth his or her opinion relating to loss and loss adjustment expense reserves. The jurat page can be created by simply printing page 1 of the annual statement. It should be signed by 2 officers of the captive that are separate natural persons. So the 4 documents that have to be sent in with the annual statement documentation would be the annual statement itself and statement of economic benefit, or SEB. Those are prepared electronically. And then statement of actuarial opinion and jurat page. Those 4 documents are due by March 1st. Slide 4, the annual audits are due by June 30th. That's for most captives with a fiscal year that ends on December 31st. You'll notice that's the last day of the 6th month after December 31st. In our example of a different fiscal year, this one being fiscal year ending September 30th, the annual audit would be due the last day of the 6th month following, or in this case, by March 31st. Again, this fiscal year exception is only for pure captive insurance companies. Slide 5, what do we mean when we say the annual audit is due the last day of the 6th month after the end of the fiscal year? We mean the annual audit documentation is due. Here again, we're expecting receipt of 4 documents. We're expecting the financial statements prepared by the auditor, also the report on the evaluation of internal controls, the accountant's letter, and the statement of actuarial opinion that was previously sent with the annual statement. Some of the auditors will include the report of internal controls and accountant's letter as appendices to the annual audit, and some keep them separate. Doesn't matter. The rules for the annual audit are found in R590-238-6. Now, some of the auditors have inquired about the report on internal controls, what report we were expecting. There's a shorter form and a longer form. This time we've decided to only require the short form since the other is more costly. This is not a separate audit of internal controls, and it's done while the auditor is preparing the audited financial statements and is reviewing the internal controls just in place as part of the financial statement review. Please refer to R590-238-6 if you have questions about the accountant's letter. The audited financial statements include the balance sheet, a statement of gain or loss from operations called the income statement or statement of income, the statement of cash flows, and the statement of changes in paid up, gross paid in, and contributed surplus and unassigned funds. It also includes the notes to the financial statements. It's prepared using GAAP with some allowable SAP. That's the generally accepted accounting principles and statutory accounting principle. And usually SAP applies to a letter of credit. The notes to the financial statements should also include first, a reconciliation of the differences, if any, between them and the annual statement, a summary of the ownership and relationship of the company and all affiliated corporations or companies insured by the captive, and a narrative explanation of all material transactions with the company. The rule states that materiality standard should be at 3% or more of the captive's admitted assets. Usually captives, that's the total assets. The annual audit documentation should be sent to us timely unless there's an extension time, as should be expected. We can approve, disapprove of the extension, and repeated extensions become more difficult. We prefer an explanation of why the auditor cannot submit the report timely. You should submit the approval of an extension to have should expect it to have our stamped approval. And then the annual renewal fees are due on the next slide for the annual license, renewal, and e-commerce fees by June 1st. In the past, the fee was due June 30th along with the annual audit documentation. We found that created a bottleneck and wasn't efficient. We've changed the due date in our code to June 1st to help create a more efficient operation. The fees that are due would be the $5,250 for captives and $1,000 for cell captives. When a new captive is formed, the annual fee and e-commerce fee are assessed during the formation stage without proration. The fee is due again by June 1st. In our example, if a pure captive is formed on December 31st, it would owe the $5,250 then. And another $5,250 would be due on June 1st the following year. The renewal fee would cover the period of July 1st through June 30th of that next year. The fee would be due again the next year on June the 1st. So know that during new formations you could have the captive pay the $52.50 and 6 months later, and it would owe the $52.50 again. The captive sale would follow those same due dates with their $1,000 fee. We want to thank you for choosing Utah. We refer you to code 31A37 and the rules found in R590-238. That was 31A-37, as well as our yearly reminders page that we send out. It's included for our 3 types of approved providers, which are the captive manager, auditor, and actuary. We do not provide approval for other types of providers that might be seeking approval from our department. Please feel free to contact us with any questions, and we look forward to working with you. Thank you very much.